Good morning, everyone. Welcome to Trading Together. I'm Mel Gacee. Thank you so much for being here. Thanks for watching this stream. My goal for this stream is to help you learn, help you become a trader, and to take some trades live in front of you and allow you to kind of follow along and take those trades with me. So we're going to have a great day. Bad data, bad labor data, bad retail sales data, bad unemployment data. Not good data, not good at all. So this could prompt the market to do some dropping. And so we'll be watching for that to see if that's actually going to happen. Are we going to drop? Are we going to get the Santa rally? So this is the daily review. Coming up, rounding down. This, again, we talked about the blue lines represent yesterday's high, yesterday's low. You can see that's this candle right there. This represents today's candle, and it starts in the overnight session. So this is our overnight high. Is the yellow line. This, oh, all right. All right. Good morning, Bill. Thank you for joining. Do you see the charts now? It said that it was sharing, but I also had a message that my connection was unstable. So hopefully you can see the charts now. All right. Thanks so much, Bill. I appreciate that feedback. Okay, so again, the yellow line showing us where we were overnight, high and low, and also that counts, this all counts as today's candle. So back to this idea of, are we getting a Santa rally or are we going to roll over? That's what I'm watching. That's what remains to be seen. Bad data, not looking good. Okay. So then we can take a quick look at the S&P 500, and the chart is going to look really similar. What I like about the S&P 500 chart is that because S&P as the index does not run all night like the SPY and the ES does, we see the gaps more clearly. So this is the S&P chart, and you can see these gaps a lot more clearly than you can on the ES chart because ES runs almost 24/7. So we're watching these gaps, right? This was a strong push up. We had this push down here that started at the all-time high on the 29th of October. We came all the way down here to our 100-day moving average, and then we got a bounce from it. Ever since that bounce, we have been moving up. So this is what we would call like a V-shaped recovery. We hit the high, we came down, we bounced up, and now we are coming around. So are we moving down? We are getting a red bar on the MACD on the daily chart. Now, we haven't had a red bar, the beginning of a red bar, since November the 5th, back here. When the MACD rolled over on November the 5th, we did continue to get some downward movement. Could that happen here? Yes, it could. We could continue downward. And our first target, let me make this a little bigger. Our first target is going to be this gap fill. We hit this support right here at 67.75. You can see the candle hit it and bounced. So I had that support line drawn, and you can see we got to bounce right off of it. These support lines, as much as they make this chart busy and hard to read, they are helpful here, and I do have them for a reason. So this support zone gave us a bounce. So right now we're creating a doji. A doji means we've got a long wick on the top, a long wick on the bottom, and a relatively small body for the candle. These are the wicks. These long, thin lines are the wicks. This is the body, this thicker line. Now, the wicks represent the high of the day, the low of the day. The body represents the open of the day, the close of the day, or the current close, since we haven't closed the day just yet. And I should say period, because the wick can represent any period of time. It doesn't have to be a day. It can be a minute. It can be a 15-minute. It can be anything you want it to be. but that is what wicks represent, highs and lows, and then body of the candle represents open and close. So we hit this support zone right here at 67.76, and our next target is going to be this gap fill. So do you see this air between these candles? That's what's known as a gap. The gap, oh, hold on guys, we're getting a sell signal. Give me just a second here. I'm going to go ahead and take a put here. I'm in. Punch it. Up just a little bit. Up about 1%. Down a bit here. Getting a little bounce. Just about flat, coming back down again. Well, this is bouncy, bouncy, isn't it? This option is moving quickly. Up just a little bit. Just flat on our profit. Up just a little. Just waiting for a little bitty drop here. That's all we need. We don't need much. All right, I'm up 8%. Punch it, I'm out. That was a nice little drop. Did you follow that one, Bill? Let me know if you did. And give me 1 minute. My dog thinks that the Christmas tree, the Christmas tree skirt, is something she can play with. Oh, man. All right. That was a quick little 8%. How'd you do, Bill? All right. Little bounce here. All right, I'm going to go back to talking about this gap fill. So that was a fun little win, guys. 8%. I think I got 9 actually. Oh, okay, Bill, got 13. Nicely done. We will take it. All right, we'll go back to talking about our big picture analysis. All right, now it looks like it could come down some more, but one of my rules is I don't like to trade the same move twice. You can see here, we pushed up, hit the VWAP. This white line here is the VWAP, this thick white line, and the VWAP stands for volume weighted average price. It's a nice indicator. It's very much like a moving average, but it weights volume as well. So that, excuse me, gives us a little bit better of a handle on what price is doing. And it looks like we are still coming down. Could we trade another put here? Yes, but I'm going to give it some time. Could it keep coming down? Yeah, and I think it will. But I'm not going to take it here because this move has already been in play. And one of my rules is I usually don't trade the same move twice unless I've got a really good reason to. So we're going to let that one pass, the rest of it, if it keeps going down. And we'll finish talking about the big picture. Now, again, data was pretty bad. I think that accounts for some of this drop today. Like I was saying, the next stop, the next target, let's say, is going to be right here, this gap fill at 1125 on 1125. That was November 25th. There was a gap formed from the 25th to the 26th. And remember, when I said we see this air, what it means is that the candle previously closed in one spot, the next day candle opened in another spot. That's called a gap. In this case, it's a gap up. We can also get gaps down, as you can see right here. There's a gap down. The reason we see these gaps is because the SPY and the ES, they keep going all night. The SPX does not. So as we move during the night, these gaps get created on the SPX. And there we go. We're still dropping. And this is the part where I have to fight my FOMO. When I know a move is happening, when I know it's continuing, but I don't want to break my rules, this is where the FOMO kicks in, and I'm gonna let it pass. Let it pass. Now, sometimes in a move that's going to keep going, what we can do is take a small trade, something out of the money, something small that kind of captures if this thing continues to dump. Now, I don't know that it's going to continue to dump, but so I wouldn't take that trade right now. But I'm going to give this time to play out. We will eventually get a little bounce up, and I'll be watching for that. All right, so that's the big picture analysis. Are we going to continue down, or are they going to kind of hold it? Now, if you notice, we've kind of been in a zone, a range, you could call it, for a while. We haven't gone too far. Really, from this line up to the top up here. So right around where we're sitting at about 67.80 up to about 6,900. Now, that might feel like a huge range. It's really not when you're looking at the daily. 100 points, a little over 100 points, we can do that in a day or two. It's not much. So that's what I'm watching for. Is this thing going to continue to curl down? We do, like I said, we do have the MACD rolling over. That is really something to be aware of. It may continue down. Are we going to get the Santa rally? It's starting to look questionable. I've been one that's been saying, yes, I think we're going to hit 7,000 year end. But with all this negative data, it's starting to look questionable. Now, again, we haven't gone too far, so we could still turn and hit that. We've got plenty of time. It's the 16th. We've got all the way through the first 2 days of January to build a Santa rally. Is that possible? Absolutely possible. Absolutely. But let's keep our eyes on these mile markers. So here's a mile marker. We lost the 20. This golden line right here is the 20-day moving average. That has been lost today. We have lost this support at 6,800. That was lost today. We have a gap fill in front of us coming up, and we're almost there. We're not far from it. So we're watching these mile markers, this 20, this 6,800, this next zone at 67.75 to 67.68. This is that whole gap fill zone. And then if we come and fill this gap, which it looks like we're trying to do today, our next real target is going to be this 50 right here. So watch this 50. This dark blue line is the 50 period moving average. That is important. You can see when we broke it before, we dumped and then came back up. Look at how far back we go. Let me zoom out and watch how infrequently we touch the 50. You can see it here, I hope, this blue line. Other than this dump that we had right in the mid-November area, we haven't broken the 50 since February of this year. That's a big deal. So look at this blue line. We are not touching. We don't touch it. We don't touch it. We don't touch it. We did touch it here, and we bounced. We got some support. We pierced it here and really took a hard dive down to the 100. And if we hit that 50 again, we could have some downward momentum happening. All right, so let's get back to my minute chart. I'm watching here. This is not a healthy day so far. Little move up, move down, little move up, coming back down. Not looking super healthy to me. This is that support zone that you saw on the daily. It's right here. Let me get back to my futures chart. And I need to turn my volume profile back on. All right. And if you notice, we're spending a little time hanging out at this red line. Now this, as I was pointing out earlier, I have lines that I keep on my chart that represent yesterday's high, yesterday's low, overnight high, overnight low. I also block off the morning range that in these green lines. And this red line means there was an area of interest in the pre-market. And I mark those. Now look at how they get respected. They almost always come and visit these lines. If I see something in the pre-market that looks different or like a weird long wick, there are a lot of, you just see some weird things. If something just looks weird to you, mark it pre-market. And that's what this line is here. This is just some odd behavior pre-market, and here we are. And it happens almost every day. So here we are sitting at this line, and let's watch and see if this becomes a support line. They've tried to hold it. So came down, they recovered, came down, they recovered, came down. They're trying to recover. So are we going to hold this as a support zone? We could. We're sitting at, that line sits at 677.4. Now, we've also got some negative gamma sitting at 675. That's the put wall. So this may be our low of day. That's very possible. Very possible that that's our low of day. So we'll keep our eyes on that. If we get a bounce from here and we get the right indicators, we could think about taking calls from here. 677 was the pre-market, and then 675 is our put wall. So we could have some more to drop if we come down and hit that put wall. We absolutely could. 675 is sitting right here at 676. What do we see at 675? Do we have anything? I don't see much at 675. So 676 is currently our low of day. It's also our overnight low. So we'll be watching that. And again, this is all counted as the same move, the one we just traded. The one I just made 8% on and Bill made 13% on. Nicely done. It's all the same move. So I'm not going to trade it again at this point. I want to see the moving averages reset a little bit, come up a little bit, and then we can look at trading to the downside again. Now, if they come up substantially, we could even look at trading to the upside, especially if we recover this little zone right here. Wow, for anyone who trades crude, apparently it's dropped below 55. And I don't follow crude very well other than how its effects shape the economy, but 55 is a very, very low price. So that's a low since that we haven't seen since 2021. Okay, another little drop here. Could we trade down to this overnight low? Could we take a put and trade it to this overnight low? We could, but I'm not going to do it. I'm not going to FOMO in, and I'm not going to chase this move. I'm going to wait for this to recover, and then we'll see what we get. All right, so let's talk a little bit about Bitcoin. Bitcoin is one that I follow pretty closely, and I've been very interested in the way Bitcoin has really, really been hammered all the way down from 125, 124-ish was its recent high, and I think its all-time high. It has dumped all the way down to 80. Huge dump on Bitcoin, and it found a little footing there, and it's moved up, but it hasn't recovered 100,000 yet, and that's really going to be crucial. Bitcoin really needs to come up and recover that 100K zone. I think it will, and I think it's being artificially manipulated because all the big boys are now getting into Bitcoin. So I think it's been pushed down because there are a lot of ETFs that came on the market, and a lot of big money starting to position itself in the crypto space. So I think Bitcoin has been pushed down to allow for big money to get in. I think crypto is going to bounce. That's my thesis. All right. We are getting a nice sell signal here. Not going to take it. Like I said, we're going to wait for this move to adjust itself, and then we'll trade again. All right. Still kind of we haven't gone too far from this area of interest. And we could be close to today's low. I don't know for sure. The day is still young. You know, if we really turn and sell, we certainly can, but I think we might be close to today's low. It's just a guess. I'm not going to trade that way. I'm going to let the market tell me what we're doing. And I have a saying, and it's called trade like water. We are going to watch the charts. We're going to pivot when we need to. We're going to go where the charts tell us to go, just like water takes the path of least resistance. That's my motto in trading because I'm a scalper. I'm a day trader. I'm not buying and holding. I'm not keeping positions for, days, weeks, months, not even hours. I'm keeping positions for seconds and minutes, right? So for me, it's very important to trade with the market. I do trade reversals sometimes, but I want to be on the side of the market. That's my goal. All right, little drop back down here. Still getting some sell signals. And again, I'm not interested in this down move. We could be slowing down right here. Let's see what happens. All right, little pop. There we go. Let's see if we can get this to give us a little bit of a reversal. We're getting a little bit of a MACD roll over here. So the MACD is this indicator down here. It stands for moving average convergence divergence. In essence, it's taking two moving averages and it's, in essence, measuring the distance between them. When these two lines cross, the histogram changes color. So right now, these two lines have crossed. The histogram has turned green. That tells us we could be looking for a buy. We could be looking to move up. When these two lines cross each other the other way, when the blue comes down below the beige, we get the histogram turning negative, which tells us we could be selling. Now, look how accurate it is. Most of the time, the MACD is pretty accurate. So it tells us right here that we're rolling over. It tells us we're getting ready to sell, and look at what it did. Boom. Nice move. Over here, it told us we're getting ready to move up. And sure enough, we got this move up. Nice move. Now, it's a little herky-jerky, hard to trade for sure. But if you follow the MACD, it is, if I could only choose one indicator, it would be a tough choice between the VWAP and the MACD. But that would be, those would be the indicators. If I couldn't have anything else in my world, those would be the indicators I would use, the MACD and the VWAP. Very, very good indicator. I would say, and don't quote me, but I did a quick study one time. The MACD tends to be accurate roughly 80% of the time. So that's pretty good. As far as indicators go, that's pretty good. Okay. Little bounce. There we go. Now, could we trade a call here? Not yet. So remember, calls, here's the one to help you remember. When you get a phone call, you pick it up. When you're done talking, you put it down. So a call is for when we want the market to go up. A put is for when we want the market to go down. And again, as I've said many times on this stream, the beauty of trading options is that we can make money when the market goes in any direction. So that is the beauty of trading options. So right now, could we choose to get into a call because we think the market might be moving up? We're getting some signs that it could be moving up. We've got the MACD, we've got these green candles, we've got the moving averages starting to push up, but what we don't have is, it's not a big move yet. We are still under the VWAP. So one of my rules, especially for new traders, is calls above the VWAP, puts below. So this white line is our VWAP, the volume weighted average price. When we are trading below that, be careful with calls. Be careful. If you're a new trader, just don't do it. Trust me, it'll save you. A lot of new traders want to try to trade reversals. For example, we're coming down. Is this reversing to the upside? It could be. A lot of new traders, even experienced traders, want to trade reversals because sometimes there's good money in it. But if you're a new trader, I would caution you to watch yourself if you're under the VWAP. Watch and don't necessarily take calls under the VWAP, and don't necessarily take puts over the VWAP. So now, can it reverse here and come up? Yes, it sure can. It looks like it might be. Looks like it might be trying. But for me, it's not quite far enough. We're just barely recovering this area of interest that I marked off this morning. We're just barely recovering that. We're just barely getting moving averages, and these moving averages are all still telling a story. What are they saying? Down. They're all pointing down. This is the 200, this is the 100, this is the 50, this is the 20, this is the 9, this is the 3. So the only one kind of moving sideways is the 20. Everybody else in the party says we're moving down. And sure enough, we came up to this area of interest, and what did we get? Boom, rejection, right there. Now, doesn't mean we can't turn and continue up, but this area has been defended from above and from below. So let's zoom out and I'll show you what I mean. So on this drop, we came down and came through it all the way down to our overnight low, and then we bounced back up through it. So we defended the bulls defended this, came back up and reclaimed it. The bears pushed it back down. The bulls pushed it back up. They reclaimed it. That's a reclaim. The bears pushed it back down. The bulls pushed it up, but just a little bit, right? Right here is where we said, could we take a call? And what did I say? Not yet. Not yet. We don't have enough confirmation. Did it look like it in the moment that we were going to keep climbing? It sure did, but look what happened. Boom, rejection, rejection. Now, is this a trade we could take to the downside? Maybe, but remember, our overnight low is sitting right here. Is there enough room? So I do have signals for puts, and I do see the downward trend, and I do think that we could consider a put. However, there's one thing that would stop me, and it's this line right here. There's just not enough room here. If we stop and reverse like we did here, right here at 10:27 Eastern, we came down, we touched the overnight low, and boom, hard reversal. Could that happen again? Yes. So there's not enough room here to make the risk worth the reward. So everything in trading is risk-reward ratio. That's huge. Learn it. It's so important to your trading. Risk to reward ratio. The risk of taking this trade, even when it looked like we were dumping, was not worth the reward, because if we were going to reverse here at this low, we were going to get, what, a couple of points, maybe. That might have been a 10% trade. That is not worth 100% loss when this thing turns and runs. And look at what is it doing? Boom. Turned and went up. So this call was not a good trade. We didn't take it. This put was not a good trade. We didn't take it. Is there a call trade here? Not for me. We're not over this area of interest. We're in a descending pattern. We've got moving averages coming down. No call trade for me. No put trade for me. So that is something I've said many times, and I'm sure you've heard me say it. 90% of trading is waiting. It's patience. Wait for the setup. Wait for the setup. I don't think I've taken one losing trade on these streams. Maybe one. I have a really, really high win rate. Now, granted, my win percents, they're not huge. I am not swinging for the fences, but my win rate is over 90%. So those wins consist of 5, 8, 10, 12% winners. Usually not much more than that, because I'm in and out really quickly. So the reason that my win rate is so high is because I'm patient. I'm waiting for the right setups. And when I get it, then I'm going to take it, and I'm going to take my see green, take green. If I see green on my profit screen, you better believe I'm going to take it pretty fast. All right. Back down. So starting to look like we might be building a downward range right in this area. Just holding this area. And just like we said, we've got the put wall sitting at 675. We've got the overnight low sitting at 676 on the SPY. I don't think we're going to get too much lower than that. Now, doesn't mean we can't, doesn't mean that this thing can't just turn and dump. There might be sellers waiting. We don't know. There could be sellers waiting. But right now, it looks to me like we're going to hold this area for the lows of the day. If it changes, then we trade like water and we change with it. All right. So let's just zoom out and kind of review what this day has done. Came in to the morning, very herky-jerky, up and down and up and down and up and down. These, a lot of times, you'll hear me say they, and what I'm talking about is this idea that big money can push the market around wherever they like. That's a theory. There's no proof behind it, but I'm pretty convinced that the markets are manipulated by big money. I could be wrong. Allow me to put my tinfoil hat on for a minute. I do think that the markets are manipulated, and I do think that it's in some ways a bit predictable. So when we came into the morning, we had big data pre-market. So we got this big data, big push, hit the pre-market high, fell all the way back down, and then right there at the open, so the open is right here where the screen goes black in the background. The gray background is pre-market. So right here, let me make it bigger. Right here, where the background goes dark, is real-time trading hours. The gray background is pre-market. So data happened, boom, you can see that. Strong push, data pushed up, pushed the market up, and then boom, we reversed all the way down. And then at the open, we went up, down, trying to just bait people in one direction or another. Then we took a little dip, then we took a little push, then we took a bigger dip, came down to our overnight low. And since then, what have we been doing? Pretty much ranging. We did come back up to the VWAP, but we've pretty much done nothing but range since we hit this low. So that's kind of what I'm looking for today, is a little bit more of this ranging behavior as the day goes on. Again, could we get some big sellers in there all of a sudden whooshing this thing down? Yes. Could we get some big buyers in there pushing it back up? Yes. But right now, looks to me like we're moving a bit sideways for the rest of the day. Can we trade a sideways market? Yes, but we have to be very, very careful. The way I trade, very fast in, very fast out, very small moves. So we can trade ranges. However, the range has to be big enough. So when we were talking about the call here and the put here and the call here, this range is not big enough. Not big enough. You cannot make enough money to make the risk worth it. So can we trade a range? Yes. But it has to be big enough. So right now, the larger range is from this yellow line at 676 up to just a little above the VWAP where it was at 679. Now that's a 30-point range on the S&P 500. It would represent 30 points. That's a big enough range that we can trade. So, but we have to be aware of these little landmines in this range. So where are the landmines? Well, one of them is right here, this pre-market area of interest. We hit near the bottom, and our top is way up here, our most recent high. We have a higher top over here, but our most recent high is over here. Could we trade this push and assume that we're going to come up and hit this high? I wouldn't assume that. We are sitting right here in this little landmine, and oh, well, now we're getting a push up through it. And until we beat this little landmine up or down, it's a little too risky, right? But right now we are getting a nice push here. So could we consider a call? Maybe. Let me zoom in. This is only the first candle to push through. So I would want to see this candle close above and then a new candle open and a continuation of the push. Can we get that? Let's see. Let's see what we get. All right, little rejection again, right at this area of interest. Another little rejection right there. So again, no trade for me right now because currently the range, we've got the bigger range over here up at this high, but the current range that's been going on for about half an hour, this is the high right here. High, high, high. And then this is the low. So we've been kind of making a flat top with a bottom that's going down, a descending triangle. All right. Our VIX is still somewhat elevated today, sitting at 16.9, up about 2.6% on the day. So remember, we've talked about the VIX pretty much every day. The volatility index, also known as the fear gauge, it gauges options on the S&P 500, and it gives us a reading that tells us, is the market fearful or is the market happy and aggressive, right? We would also call that risk on and risk off. So if the market is fearful, we would call that risk off. They want to take risk off the table. If the market is exuberant and happy and the VIX is down, we would call that risk on. They're willing to take riskier trades. They're pushing the market upward. They're getting into sometimes alternative investments. That's a risk on environment. All right, nice push here. Right up over this area of interest, broke through this little temporary high right here, up over the 50. Strong movement at this point. We could consider a call here. We could. I'm going to try a small position here on a call. I'm going to get into the, let's do the 678s. Punch it. I am in. Okay. Just kind of floating here at the 100. Now we're moving a little bit. I'm going to take a quick win right here at 4%. Punch it, I'm out. It may continue to climb up to the VWAP. I'll take that little quick win because we're getting a little extended on this move. All right, another win on the stream, guys. 9% on the first one, 4% on the second one. And see how it's getting a little, yeah, it was getting just a little too extended there, so I didn't want to hold it. Took that quick win, and there's a reason for that. So yeah, great trades today, and thank you for being here. I think we're going to go ahead and end the stream early, just a couple of minutes early. But thanks for being here. Join me again tomorrow at 9 o'clock Mountain, where we're going to trade live together. We're going to do some learning and some growing. If you have questions or comments, this is a friendly place. This is the place to do it. So that's my my whole motivation for this stream, is to teach traders to trade in front of you, to show you it can be done. They will tell you 90% of traders fail, and that's probably true. But it can be done, guys. It can be done. And so my my goal is to teach you, to help you, and to get you successful, to get you profitable. So thanks for coming. We'll be back again tomorrow at 9 a.m. Eastern. 9 a.m. Mountain. I appreciate you being here. 2 trades today that we took on the stream and won. 9% and 4%. We'll be back again tomorrow with some more trades. I appreciate you guys. You take care. Bye-bye.